right. Well, thank you, John. I appreciate that. Give you a little information about the organization that I work for. Our name is EPCOR. We are just one of, I believe it's 17 or 18 regional payments associations across the United States. So we are a not-for-profit trade association, and we do provide electronic payments education and support to over 2,300 member financial institutions in the central United States. EPCOR is also a direct member of NACHA, which is the National ACH Association, and as such, we are recognized as a licensed provider of ACH education. As John noted, my name is Shelley Simpson. I am the Payments Education Assistant Director. I joined EPCOR in 2005 following an 11-year career with the Federal Reserve Bank of Kansas City, and I had the pleasure of earning my accredited ACH professional, or my AAP, in October of 2006. I say pleasure because if you've ever taken the exam, it's not necessarily a pleasure, but it was great knowing that I passed. And it is certainly a great honor to be here with you today. And so I hope as we go through this that as you come across some questions, you'll jot those down so that when we do have the opportunity for questions and answers, we can get those taken care of for you. So as we move along in our handouts to slide 4, as you look at the role of the ODFI, so the ODFI is the Originating Depository Financial Institution. As an ODFI, your bank offering ACH origination services, you really play a pivotal role in the network. In fact, you bear full responsibility for all of the ACH entries that you originate, whether it's on your own behalf or on behalf of other companies. And unfortunately, those responsibilities don't stop once that ACH file has actually been sent into the network. Then you're going to have some daily operational tasks, some issues, and possibly some exceptions that will need to be addressed. So with that in mind, I tried to design today's course to be able to better assist you in managing any ACH origination exceptions that you might come across so that you can minimize your risk and loss as well as ensure your compliance with the ACH rules. And so it is my hope that by the end of the session, you're going to better be able to assess origination errors and make the determination as to what the appropriate action is to take. And as you'll see as we go through these, there may be multiple courses of action, but you have to decide what is most appropriate for your institution, for your particular customer who is originating. It's also my hope that you'll be able to identify key areas within your ACH origination program that you need to be monitoring, and that as necessary, that you will update your origination procedures to include some best practices that I'm going to share with you as well. Now, to that end, our agenda is going to look something like this. We're going to start out with some auditor findings that are related to ACH origination. We'll then look at the importance of your agreement. How is it that it's really driving some of your procedures? We'll then discuss, that's the oops there, your origination issues and errors that you might encounter. And these could be things such as pre-notes and reversals and requesting that items be returned, notifications of change, or even getting requests from financial institutions that have received these payments. And lastly, I want to explain the importance of monitoring your origination activity. And again, I'm going to share with you some best practices related to that monitoring. So as we look at handling these situations, we're going to start out by, talking a little bit about the ACH network. In fact, all financial institutions participating in the network have to be able to receive ACH transactions. So we look at those as being receiving depository institutions or RDFIs. But when it comes to offering ACH origination services, this really becomes a choice for that financial institution, and it's one, quite honestly, that's not made lightly because there is additional risk that that institution is going to be exposed to. Because as you look at the role of the ODFI under the ACH rules, that ODFI is going to be warranting that ACH entries have been authorized, that they are timely, that they're for amounts that are due and owing, they're destined to the correct account, and on and on. And so again, they bear full responsibility and liability should anything go awry. So if anything goes wrong, it's going to be on the ODFI. And of course, one way to manage that risk for the ODFI is to perform an annual ACH audit. But when it comes to the ACH audit, it's really looking at the requirements under Appendix 8 within the rules, but it doesn't need to be limited to just the ACH rules. So Appendix 8 is going to say, according to the ACH rules, are you in compliance? But keep in mind that there are other audit considerations, such as looking at your institution's ACH policies, your procedures, any other regulatory compliance obligations that you have. And so these other aspects of that ACH operations, such as OFAC compliance, your business continuity plans, risk management policies, maybe compliance with other regulations, you need to be reviewing those as well as just looking at, am I in compliance with the ACH rules? And this is a methodology that, quite honestly, our association uses as we go out and conduct audits on behalf of our members. But it not only ensures that an institution is compliant across the board, rules, regulations, policies, but it also helps to manage any potential losses by being able to see where those gaps are between what your institution's procedures are versus your compliance requirements. And so we went to our auditors, I went to our auditors, if you will, and I asked them, could you share with me some common ODFI audit findings? And they were more than kind enough to do that. I was specifically curious to know how often the left hand knows what the right hand's doing. And don't worry, when I asked that question, they removed the names to try to protect the innocent, I should say. But what they found is that there was, in one particular instance, a financial institution's procedures were inconsistent with their ACH management policy. And so their recommendation there was you either need to bring your procedures in line with the policy or you're going to need to update your policy to coincide with the procedure. So again, very important that those go hand in hand. Some of the other findings that they shared were related to where an institution's policy was to review exposure limits on an annual basis for their originators, and yet some of their originators were scheduled for review dates that, quite honestly, were outside of the prescribed time frame that they had set for themselves. They've also seen situations where the ACH Origination Agreement had indicated that the approved standard entry class codes or the type of payments that could be initiated were to be covered in a Section 33 of the agreement. However, they didn't include that part of the agreement. So, again, leading to a little bit of confusion for their originators. And they've also seen where older versions of the agreements aren't addressing more current security procedures. So, maybe they have enhanced their online banking product security to include tokens, and yet, again, they did not address that within their agreement. In September of last year, the ACH Security Framework Rule went in place, which requires non-consumer originators or businesses who are originating ACH payments, whether it be payroll or they're debiting their clients or members, to ensure that they are protecting financial information related to consumers, so routing numbers, account numbers, potentially social security numbers, this non-public personal information that could be included in most cases. Routing numbers and account numbers are certainly included in an ACH transaction, but you might see a social security number, or you might even see an account number associated with a bill payment be in the addenda record, so perhaps my account number with the electric company. But to ensure that not only are financial institutions protecting that, but those companies who are originating those payments are as well, and that they are protecting it through the entire life of that payment. So from the time they collect it, while it's being transmitted, being processed, until the time that it is destroyed. and to also be able to prevent that from any potential data breaches or unauthorized or fraudulent use, if you will. And so again, they're not addressing more current rules, and so older versions of agreements, outdated. And they've also seen agreements that reference additional information in schedules that, again, don't exist. So we're reading along clause number, 25, and it says, please reference Schedule A.